Hey guys, how are you? It's Dave with Moniology. Hope everyone is having a great weekend. This is the weekend review for November 25th and 26th, 2017, where we go through some of the most important sectors in the markets from daily, weekly, and monthly perspectives to try to get a better understanding of what's going on in the markets, where we've been, where we are, and where we're likely headed. This gives us a very good idea of the areas the sectors that we want to trade in and those that we want to avoid or short altogether. Guys, let's have a look at what's going on. So starting with the 10-year Treasury yield, this one's very important to help us understand kind of what the dollar's going to do, what the fixed income trades might do, and as well as precious metals. We've been very bullish on this instrument from a longer-term standpoint for the better half of this year. And as you see here, it's been consolidating here once it's broken out of this downtrend. Now, on the one hand, it kind of looks potentially like a head and shoulders here. So this is something you want to look at from a daily standpoint. On the one hand, the RSI is right below the 50 and looks like it's pointing up. So we might be breaking this neckline around the 2420 level. If that breaks to the upside, then that likely confirms that we're indeed headed higher to test this 26 area. If, however, we break below 23, then that probably confirms that we're likely going to retest this neckline here around that 21 or possibly a little bit lower as you extend this trend line here. But for the time being, it's consolidation. But as you look at the longer term time frame, so long as we're above the 50 on the weekly RSI right here on the weekly, we have plenty of room to consolidate through time, and eventually we'll break above that 25-26 zone and head much higher. And it's our prediction that we're going to see 3% yields sooner rather than later. And looking at this from a monthly standpoint, this is a very bullish flag pattern. We're just in the midst of a consolidation breakout from this flag formation. So again, expect to see 30 at some point in the not too distant future. Taking a look at gold. Gold is still in this consolidation pattern. It's kind of like this large cup and handle, if you will. And now it's starting to have a rounded base again. It needs to break above 1300 to make a run for 1320 and again 1360. We're above the 50 on the daily RSI, which is positive, but it's kind of curling back down. So will it hold? If it holds, very bullish development. If it doesn't hold, then possible kind of retest back to that 1260 level. So let's see what happens here. For us to go long from a longer time frame, we want 1300 to break to the upside. And gold from a weekly standpoint is still consolidating above the 50 on the weekly RSI. It's very bullish development so long as it stays above that level. And like I said, it just needs to break this 1300 area, and it's off to the races. You look at the MACDs; they're curling up. So we think that this is going to break to the upside very soon. And precious metals led by silver, gold, and platinum are definitely where you want to be. From a monthly standpoint, this is a very bullish development. We are in amidst of a very strong bull market that's just corrected for the last 5 years. Now, if you were in this bull market, it was nasty, painful, and downright awful. But if you look at it from a longer time standpoint, this is just a small correction. And now we're breaking out of this downtrend since 2011. We're finding support on the 50 on the monthly RSI. We're curling up, and we're basically consolidating above this breakout zone. So very bullish development. Don't be surprised to see gold retest 2000 or 1923 at some point next year. And taking a look at the high yield bond market. So high yield is a great barometer of what's actually happening underneath the surface of the stock market. And it kind of broke down here, and now it's rallying again. The question is, what happens here when RSI hits that 60 level? That's kind of the point where momentum started breaking lower. If it can break above that, then perhaps this was just a washout. Found support around the 200 daily moving average, and we're headed higher off to the races. We'll see. Now, looking at it from a weekly standpoint, it broke down here when it broke below 60. Now we're retesting that level from the downside. I think it's not going to be able to break this level, and if it doesn't break this level, we're headed lower. My opinion is we're going down towards that 34 level eventually in this downturn. And looking at it from a monthly standpoint, we're still in a very overbought and very bullish environment. we kind of have a hammer here so far. So from a monthly standpoint, it looks good. I have pointed out for a while the MACDs are curling downward towards zero. That's not a good sign, but again, so long as we're above that 35 zone, there's no reason to be alarmed here. Taking a look at crude oil, our favorite sector in the market has been since low 40s. We've been right on in terms of the call, and we finally broke out above 58. Now, one thing I'm pointing out here is there is a negative divergence on the daily. We're at almost 59 here, but RSI is not at the level it was when we hit that 58 level the first time around. So MACDs are above zero, so it's very possible we're breaking higher and RSI will follow, but you generally want to see momentum lead, and right now it's not leading. So that's just one area of slight concern. Now when you look at it from a weekly standpoint, it looks fantastic. It broke above the 70 on the weekly RSI. That's kind of what accounted for this big move. If you watched our previous videos, we pointed out once you break above this 200 EMA on the weekly, that's also going to coincide with breaking above that 70 on the RSI level. So it's going to hit 60 to 62 in our opinion at some point, possibly as early as this week. It might pull back down to 55 for a while thereafter, but ultimately this is, as you'll see on the monthly chart, this is an inverse head and shoulders pattern right here, and the neckline is at 60 level, and if it breaks, the target is well above 80 to 84 level. So some tremendous upside in crude oil unless you drive a lot, in which case it's going to hurt. NASDAQ looks good. Not going to cover it here because it's just very overbought, but overbought means good gains. And from a monthly standpoint, it kind of broke below a bearish wedge, but still going higher. Momentum's leading, so NASDAQ looks fantastic. The Russell's here is kind of like double topping on the one hand with severely negative divergence. But it's possible if it breaks above that 1550 level, I guess, and creates new RSI highs that way, that's something that would be a very positive development for the markets. Right now, I would kind of stay away from the Russell unless it breaks that 1550 level. Then you kind of know it's setting up for much higher prices ahead. Russell weekly breaking to new highs on the one hand, but like I said here, there's negative divergence here, so that's something definitely you want to be cognizant of. And Russell monthly, you broke down from this bearish wedge, now we're retesting it from the upside. Will it hold? Will it not? Well, stay tuned. It might take a couple months to see what actually happens here. But bottom line, it's just not a trade we're interested in. S&P's creating negative divergences on the daily. That's not a positive development here. You look at it from the weekly, it looks great, and looking at it from the monthly, it looks fantastic. Momentum is higher here than it was in previous points, and that's precisely what you want to see. Taking a look at the US dollar, we've been very bearish on the dollar following this predicted upswing, this corrective action to the upside. Met resistance right around the 200 daily moving average, and now we're headed back towards, in our opinion, under 90. So if you're a dollar bull, you got a lot to be concerned about. If we break below this 38 level on the weekly RSI, that'll likely coincide with this 91 level. That'll probably confirm that the next move is indeed lower. And finally, when you look at it from the monthly time frame, 8750 is an area that you want that we're targeting as the first major line of defense, possibly as low as 80. But ultimately, this is a bullish chart when you're looking at it from a long-term standpoint, like 10 years, where it could conceivably hit as low as 80 and then eventually hit 120 at some point in the not too distant future. When I say not too distant, maybe in the next 5 to 10 years, so it depends on your time frame. But ultimately, in the short run, the dollar looks very, very weak, and that's very good if you're a precious metal or a commodity bull. Finally, the VIX. VIX, once again, it broke out of this downtrend. It spiked, created a higher high. Now it got squeezed down all the way down. Now it's finding support around that 40 level. Can it break back above 10? Well, we'll have to see. once again, this kind of bullish flag, every time it hits this downtrend, it gets knocked down. So until it can break above this, there's really nothing to see here. But when it does break above that, there's going to be a ton of short covering, and that will likely result in a recession, in our opinion. And finally, the monthly, well, it just continues up and down in this downward trajectory in this bullish flag, and there's really nothing to see beyond that. Finally, looking at the world chart, we had quite a move in the last couple of days on the world indices, from a low of about 1969 to a high of 2017. If we can break above that 2020 level, that'll be probably an indication that we're looking to head higher. But again, kind of negative divergences on the MSWORLD index, and that's something to be aware of. But this looks pretty darn good. I mean, look at this hammer pattern last week. Kind of found support above the middle Bollinger Band, and if our RSI just continues to need to make new highs, otherwise it's creating divergences to the downside. Ultimately, it's just not a risk reward we want to play, but nonetheless, 2400 might indeed be the target that it wants to head towards. But that 2100 level is a level to really it needs to break before I would say that 2400 is in the sights. Anyway, guys, bottom line is dollar's weak, oil is good, but there's some divergences in oil and junk bonds and the S&P and the Russell, so negative divergences for those areas. So those are some things to consider. Precious metals appear to be strong. Gold looks like it wants to break above 1300, so let's see if that happens this week. Great luck, good luck with your trading, guys, and have yourself a wonderful week.